This is the Demystifying Crypto and Building Wealth podcast.
I knew that would be worth trillions.
That had never existed in human history.
There's been massive opportunities.
The #1 podcast to help you understand and get insights into the crypto world, blockchain technology, wealth building, and financial investing. Now, here's your host, Tico Tawari, the world's #1 most trusted cryptocurrency analyst and Wall Street veteran with decades of experience in the financial space.
Friends, and welcome to this week's IG Live. There's certainly a lot to talk about this week. So much going on in the crypto space. Let's give everybody a couple of minutes and we will get into it. If you're sitting there finding yourself in a puddle of fear, take a deep breath. We're okay. And I'll let you know what's going on right now, why we're seeing what we're seeing, and what you really need to focus on as you pull back the camera. But of course, anytime we see big drops like this, it can be unnerving. Again, something that I've told you repeatedly is that this is crypto. On any given day of the week, for any reason, you can be down 20%, 30%, 50%. Okay, somebody's saying that they can't hear me. Can everybody else hear me or not hear me? Because that would not be good if I can't be heard. Okay, can you hear me? Hey, London. Adrian. Just somebody give me a thumbs up if you can hear me. You can. Okay, all right, terrific. Super, so maybe that was just something over there. Good to see you, Pasha. Okay, Matt can hear. All right, super. We'll give everybody just a couple of moments. Fantastic. And then we will get into it. So, hands up who was freaking out this week or is freaking out right now. And there's no shame in admitting it. So you can give me a little hands up, a little thumbs up, a little heart, and let me know, hey, this has been a tough week. Okay, so I'm gonna kick things off here. So remember, what I've said, when you're in crypto, you want to have your long-term stack and you want to have your short-term stack. And on your short-term stack, during a bull market, you buy the dips and you sell the rips. On your long-term stack, you leave it alone for the bull market to come to fruition. As I've said repeatedly, I think Bitcoin goes to at least $150,000 before this bull market is over. In between now and then, there will be a lot of volatility, as there always is a lot of volatility, even in bull markets. So let's talk about this particular volatility right now, what's going on, what caused it, and how will it resolve itself. So by now, many people know that this volatility is being caused or has been caused by the yen carry trade unwind. So what does that mean? Well, for a long period of time, you could sell short government bonds in Japan that had essentially a negative interest rate. So you were paid to borrow money. So you would then your account would be credited with Japanese yen. You would then take the yen, buy dollars, and then take those dollars and buy assets. Generally, the NASDAQ or the S&P 500 or Magnificent 7 stocks, and you would have what was called a carry trade, where you borrow in one currency and then you buy assets in another currency that you think are going to appreciate in value, and you catch that spread between your cost of carry and the assets that you buy. And that trade has been a wonderful trade for the better part of a decade. Now, the Japanese central bank has decided that they're going to start raising interest rates. So as they started raising interest rates, what happened is that the cost of the carry trade went up. And so people had to unwind their carry trade. So they had to buy back the Japanese assets. But in order to do that, they had to sell the assets that they had bought with that money. And this is what created this massive unwind. And so Wall Street and global finance being so lemming-like, everybody hits that sell button at once. It has nothing to do with the underlying securities or the underlying market. and they have to get liquidity because they're getting margin called and go cover their margin calls over in Japan. Now, what does that do? That then creates more volatility, which starts hitting people that were using leverage on these high beta names, tech names, and they start getting slaughtered, and they start having to sell in order to cover their margin calls. Then you have companies, the hedge funds or managed money companies that have exposure in the equity market. They also have exposure in the crypto market. Well, guess what? Crypto is a 24-hour source of liquidity. It never closes. So what do? They start selling Bitcoin. They start selling ETH. They need to raise cash in order to meet their margin calls in their equities. Then a company called Jump Trading has to liquidate $500 million of ETH. Well, guess what? ETH is plugged into the entire DeFi ecosystem. So as ETH goes down, everything else goes down. Now all the leverage traders on crypto are starting to get sold out of their positions, and we see $1 billion in leverage liquidations over a 24-hour period. So again and again and again, we come back to this idea of leverage really just crushing people, which is why I say just don't use leverage, certainly not in crypto. It's not necessary. And as these leverage traders blow up, it gives us an opportunity to buy more at a great price. Here we are now, Bitcoin at 56K, at the 2,400. These are cheap prices that are being driven by factors that have nothing to do with Bitcoin. They have nothing to do with Ethereum. Just like how in March of 2023, when the American banking system was prolapsing and Bitcoin was just getting destroyed, Ether was getting destroyed, I said, look, this has nothing to do with Bitcoin. This has nothing to do with Ethereum. This is a buying opportunity. Same thing when COVID hit. What would a global pandemic have to do with the validity of Bitcoin? Absolutely nothing. But that didn't stop Bitcoin from going from 8K to below $4,000. Why? Why does it do that? There's this stupid news story on CNBC. Bitcoin proving it's not quite the digital gold many traders were hoping for. So when I see things like that, obviously it's a clickbait title. It's a very dumb clickbait title. Here's the thing to understand. Bitcoin is a 24-hour source of liquidity. And if you're dying in the equity market and you need capital right now, the Bitcoin market will give it to you, right? I mean, it'll take Bitcoin down 50%, but you want liquidity right now in billions? Here you go. You need it at 3 a.m. on a Saturday morning when the rest of the market is closed. Yeah, we'll give you liquidity. We're going to charge you for it. So you'll see that every time that Bitcoin is used as a source of liquidity when the rest of the world is getting margin called, yes, Bitcoin does get hit. It does get hit hard, but it doesn't stay there. If we look back at the COVID-19 sell-off, Bitcoin bounced back faster and further than any other traditional asset. Beat gold, it beat equities, it beat commodities, it beat every equity index that was out there. Again and again and again, Bitcoin has proved itself to be incredibly resilient, incredibly, what's the word I'm looking for? Anti-fragile. So while there will be some negative headlines right now about how Bitcoin didn't do its job in protecting you the way that gold does, just don't pay attention to any of that. This is a phenomenal buying opportunity in Bitcoin, in ETH, in crypto. By this time next year, these prices are going to be significantly higher. Now, again, you might sit there and be like, oh, Tawari, you're just talking your book. You have a vested interest to be bullish in Bitcoin. Here's the thing. I've made most of my money through investments, and the bulk of my money is in Bitcoin and crypto investments. So that means that I cannot afford to have a point of view that is driven by my book. My point of view has to be driven by reality, because this is my net worth, and I like being rich. I can't be more honest than that. Being rich is awesome, and I don't ever want to be poor again. I have gone broke so many times in the past by making bad decisions. I will not let that happen again. So I am constantly looking at my investment thesis and saying, are you right? Is this correct? So again, it's not just about just having a fixed point of view and never questioning it. I think you must question your point of view. Otherwise, you can just get trapped upside down and lose your net worth, which is a position I never want to be in again. And so the reason why I mention this is because something incredibly bullish happened this week in the crypto space that hardly anyone is talking about, the market is ignoring, and yet to me, this again is another marker of why I'm in the right asset at the right time. And what I'm talking about is Morgan Stanley's decision to allow their 15,000 retail brokers to start recommending Bitcoin. Friends, that is incredibly bullish, because now that Morgan Stanley has allowed it, every other wirehouse in America is going to have to allow it. If not, they put themselves at a competitive disadvantage. Now, when will this show up in the price of Bitcoin? I don't know. It could be a month, it could be 2 months, it could be 6 months, it could be next year. That part doesn't matter. The part that matters is the largest retail network in America can buy Bitcoin, a finite asset. That is incredibly bullish. So again and again and again, I don't rely on the price action to tell me what I should think about my investment. I focus on the most important driver of value when it comes to Bitcoin, and that's adoption. That's adoption. Is adoption increasing or is it decreasing? Are there more people coming to the ecosystem or less people? If there are more people coming to the ecosystem, Bitcoin's going to rally. Then Eth's going to rally. And then the altcoins are going to rally. This is all you need to know to make a fortune from these assets, especially during times like this when people are running around scared with their, like a chicken with their head chopped off. They are not looking at what truly drives value in this asset, and it's adoption. The other piece that you need to pay attention to is monetary policy. Anytime you see the traditional financial markets just get hit the way they've been hit, in an election year, there has to be a policy response. Look at the Bank of Japan. You don't think our people were on the phone with the BOJ saying, hey, what are you guys doing? You're crashing our market. BOJ just came out and said, whoa, okay, we're not going to raise interest rates. We're not going to move so quickly. We're going to really be much more careful in how we communicate with the market. I mean, you saw hundreds of billions of dollars in value get wiped out overnight. I mean, I'm sure that those BOJ bankers were on the sharp end of some very rough phone calls from the United States. So, what's the point? The point I want to make is that if you are in a position to add to your Bitcoin position, do so. If you're not in a position to add to it, then don't worry about it. Just go enjoy your day, your life, what's left of the summer, and just let time do the heavy lifting for you. And what do we have working in our favor? We have an adoption cycle, a brand new traditional financial adoption cycle that is just beginning. We have global governments that are addicted to easy monetary policies that provides an incredibly bullish backdrop for our asset class. And so put your faith in that rather than in the day-to-day action that you see in the price of Bitcoin. Okay, this is a good question from Rohill. If the spaghetti hits the fan, do you think people will care about Bitcoin? I think rich people care about preserving the value of their money. And if the spaghetti hits the fan, the central bankers and governments will do what they've always done, and that is debase the currency by printing money. And so wealthy people need a way to preserve their assets from that relentless money printing, and they are beginning to wake up to the idea that Bitcoin, even a small allocation, 1 to 5%, can be enough to blunt the impact of extended and outsized loose monetary policy. So my answer is yes. I think people care because it provides a way for them to protect the value of their other financial assets. And that is a very different narrative that is at play now than was 9 or 10 years ago. Bitcoin is now being treated as a global investment asset that has a place in all portfolios, not just the portfolios of libertarian nuts, which is the way that we were characterized 10 years ago. Is MicroStrategy a wise B2C alternative for a Roth IRA? No. You can just buy IBIT, IBIT, and you can put that in a Roth IRA instead. Okay, question is, will prolonged high rates or recession keep crypto down for another 3-10 months before bull run resumes? I don't know. That's the honest answer. I don't know. I don't think this is an interest rate story. I think this is a monetary debasement story and an adoption story. So if we go into a recession, which I don't think we will this year, then they're going to lower interest rates and print more money, which is incredibly bullish for Bitcoin as a finite resource. Now, will the market wake up to that right away? No, probably not. You probably see some volatility, and then all of a sudden the market will realize, oh my goodness, they're running the C19 playbook again. We better own risk assets, and the best risk asset in the world to own, in my opinion, is Bitcoin. Question, I hear the Fed is about to print money because of fear of recession. Do you think it's true? I don't know. I do know that to a man with a hammer, everything looks like a nail, and to the Federal Reserve, their only solution to any slowdown is just print money, which is really beneficial for us as Bitcoin holders. Why do I like IBIT better than MSTR? Well, they're two different plays, right? MSTR is essentially a levered play on Bitcoin, but you have corporate risk. Bitcoin is just is a pure play on the fundamental asset. So I would always recommend owning IBIT over MSTR. And if I was going to buy MSTR, and this is something that I've recommended in the past, it's a smaller position relative to your core position. Question about whether Sol is taking over from F. Well, that remains to be seen, but it's certainly given a run for its money. It's the reason why I've recommended it. Okay, I think that's all the questions. Anything else before we close things up? Okay, so long story short, there's going to be more volatility. I have no doubt that there will be. It's a mistake to let that volatility impact you emotionally. We are in the right asset at the right time. At $150,000 Bitcoin, this volatility that we've seen, it won't even show on the chart. So what I want you to do is, if you find yourself freaking out, just do a long exhale, focus on the fact that we are at the beginning of a brand new adoption cycle. Focus on the fact that even if the worst case in the economy happens, we have a terrible recession, there's an awful war, interest rates will get cut, money will get printed, and Bitcoin will gun. All right, friends, I want to thank you so much for tuning in today. And as I always like to say, I want you to always remember, let the game come to you.
So that concludes today's episode. Thank you for listening. We'd love to hear your thoughts in the comments section. You can find the show notes on www.tikatiwari.com. If you found this episode helpful, please share it with others, talk about it on social media, and leave a rating and review. Don't forget to subscribe so that you never miss another episode. Thanks again, and we'll see you next time.